What's going on, everybody? Welcome back to yet another video. So in today's video, I'm going to be giving you guys my SPY and QQQ technical analysis, as well as discussing some other things that you should be paying attention to going into this market week. Real quick, before we can hop into the video, what I need you guys to do is make sure to click that like, as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Before we hop into the levels, we do want to know about the economic news coming into this week. So if we go to Monday, which is going to be the 27th, we can see at 8:30 that we have our durable goods, core capital goods, and pending home sales index. This is going to be very, very important, but you also do want to pay attention to these two. On Tuesday, we do have trade-in goods, and then we have the home price index, which is going to be super, super important. So you do want to pay attention to that. That's going to be at 9 a.m. Then consumer confidence index is going to be at 10 a.m. That is going to be super important, so make sure you guys pay attention to that. On Wednesday, we have gross domestic product revision, final domestic demand revision, and gross domestic income revision. I would say pay attention to these three. And then on Thursday, this is going to be super important, PCE inflation, core PCE, PCE year over year, core PCE inflation year over year, real disposable income, consumer spending, personal income, consumer spending, initial jobless claims, continuing jobless claims. So we have a lot on Thursday that we want to pay attention to. Literally all of this is going to be super, super important. And then on Friday, we just have a few other things that you do want to pay attention to: manufacturing PMI, manufacturing index, and construction spending. But now let's hop into the levels that I'm going to be watching going into this week. So if we head on over to SPY, here are going to be my levels going into this week. I did talk about this. I may have talked about it in last week's video, but if we're looking at SPY and we go to the 4-hour time frame, you can see we had this inverse head and shoulder. Shoulder one, head, shoulder number two, and we ended up breaking above that trend line in the overnight session. As we can see on Friday, this thing went absolutely insane. So going to the daily time frame on SPY, what I'm actually seeing is we might be forming a huge inverse head and shoulders right here. So as you can see, we got shoulder number one, head, and then possibly SPY comes up to like 417.52, comes back down to the bottom of this shoulder at like 380, and then we come back up, break the neckline, and continue higher. Now obviously that's going to take a while to actually happen, but you know, that is a possibility. So as far as the levels that I'm going to be watching this week, so if we're looking at SPY, we can actually see that it made that 50% retracement from this pivot high to pivot low. So what I'm going to be looking for in SPY is going to be a break above Friday's high, which is going to be at 390.09. If it's able to do that, I have no resistance until 395.78, 396.23, and 396.58. So there's going to be a lot of resistance in this area right here. However, if SPY does break above that level, we have a huge gap that it needs to fill all the way up to 401.44. I would also mark 400 just because that's psychological resistance, so you definitely want to pay attention to that. However, on the flip side, if the market ends up dumping, I will be watching SPY below Friday's low at 381.37. If it breaks below there, we could see 380.54, and then we have a huge gap that it needs to fill all the way down to 378.83. And then we have a quarterly person's pivot at 377.96, and then below there, no support until 370.18. Again, I'm gonna say the biggest thing is gonna be watching this possible inverse head and shoulders, because if this does end up happening, again, we could see SPY come all the way up to like 417 before it starts pulling back down to the downside. So yeah, definitely keep an eye on all of those levels and the possibility for an inverse head and shoulders. Now real quick, another thing that we do want to pay attention to obviously is going to be the 10-year yield. As you guys know, TLT has been the leading indicator in the market, and I don't want to be, you know, the bearer of bad news, but what happened last time TLT broke below the bear flag? Well, the market followed. As you guys know, TLT has actually been the leading indicator in the market.